Yo, welcome to the Finance Weekly Update. We live in a world where everything happens so fast. I hope everybody had a good summer so far. Trying to play with some new toys and gadgets, see how that works out. So I'll try to manage all this while we go through this information. Don't forget that this is not advice, it's just my opinion and the news that I curate, that I go through on a daily basis and try to put together to put a picture, big picture together. So we're going to start with the different indexes around the world, macroeconomy, then the disconnect that is happening between the economy and the markets. So, for example, the Dow Jones, we can see is sitting at almost 80% of its all-time highs. It's recovered like tremendously from its bottoms in mid-March, around like 18,000. We're sitting close to 28,000 that we saw this week. All-time high was sitting at around like the 29,000 something, 30,000. So according to those kinds of numbers, which should be the Dow Jones, or we can look also at the S&P 500, or the Nasdaq is even worse, where the Nasdaq actually, S&P 500, same thing. Nasdaq is actually beating its all-time high. So obviously Nasdaq is the index that covers the tech, so the big companies like usually like Google, Amazon, Facebook, that kind of stuff. So why am I pointing this out? It's because right now it is the right time in your life to review your position, to review what you got as investment, your plan for the future, and make drastic moves and not be afraid to cut some losses somewhere to reposition yourself. Address the shortcomings. We're talking about trying to build yourself a what they call the 100-year portfolio or the dragon portfolio. And what I mean by that is, I'm not going to tell you exactly what it is, but go and dig into the resources I have on Shed Talks, and you'll find professional people talking about those things and giving you education on how to do it and apply it to your situation. So one thing that's happened with Warren Buffett has been a big proponent that gold is not a good investment, doesn't pay interest, doesn't pay dividends, anything like that. But this week he actually got caught buying gold, which was a way to spin the news, because he didn't buy gold, physical gold. He actually bought the company Barrick Gold that has a ticker that name is gold. So I mean, it's even worse because he's basically not investing in the U.S. market. He's investing in the Canadian market, and on top of this, he's investing in Canadian gold. So that tells you a little bit about how he's hedging his bet, and I think that's also a good way to talk about how precious metals and important things to have in your overall holdings and life investments for the future. So on top of that, one of the things that Warren Buffett has done lately is he sold a lot of things, and prior to that, he was already sitting on a record pile of cash of about $140 billion. And that really resonated a lot with what's going on right now, which is that wealthy investors, for most of them, have been increasingly sitting on higher amount of cash. And that's just like a foretell sign of what's to come here in the market, and we'll talk more about that, the numbers and what's hidden behind what's being presented in the news. But basically, wealthy investors, people that the smart money, as they call it, have been basically using these rise in the market to reposition themselves, go to the sideline, and get into more real asset. So one of the things that I didn't cover in those indexes is the US dollar, how other currencies are going up in value. That means that the US dollar is going down in value. And that what that means from a macro point of view is that the US economy is slowing more than other economies are. And there's also the impact in there of the printing of money to quantity infinity. So that works until it doesn't work anymore because you got to produce bonds for justifying the printing of that money, and eventually it becomes the a point of like it's just funny money. Like how much money are you going to print? And we'll talk about that when we go over the things about China and stuff like this. Um, so one of the things I wanted to cover. Well, I mean, here's the point. Like the market has given investor a gift. It's now up to you not to waste it. Like I pointed out, things that are not performing. It's time to think about like the new economy. So unfortunately, I think what's happening is a concentration of corporation. So giving even more power to the big corporation like the FANGs and things like that. Um, and the price to pay for that is the shutting down of a lot of small businesses. So unfortunately, it's important to move the money around towards the new economy, uh, but we need to keep in mind what I'm going to be talking about in a little bit here, and it's how that goes up and down. Like the market is not a linear equation, and it's important to think that in the midterm, we're facing some serious headwinds in the economy that are like unprecedented in history. Um, so one of the things that also came out this week is Russia that came out and announced that they were going to produce a vaccine. And the only thing I want to point out is that like nobody embraced that. It was really put down. It really lifted the market on Tuesday when that came out, and I think that this is part of a bigger picture plan. Like Vladimir Putin is not taking gambles without taking his odds into considerations, and I mean it's part of a bigger picture. But basically, this is a good way to boost the economy in a time where numbers are going to be really, really bad soon. And trying to balance two forces, the euphoria of vaccine and going back to what normal is versus the reality of the numbers that are going to say like normal just doesn't exist. This was a big illusion all along. It's like a mirage in the desert, sorry. And basically it's just going to vanish. Why? Because even if everybody's healthy, the healthy individuals don't have jobs necessarily to go back to. There's not an economy to take them back in, and most likely their skills are not even up to date with the market anymore. So it's part of a much bigger picture. I think the virus is just the excuse for resetting the system financially. And Russia and China have been acting seriously towards that kind of scenario playing out. So they bought lots of gold, they owed lots of debt of like China, especially for U.S. economy. And the whole vaccine race, and then you'll see some more news about China in regards to what they're doing right now. What's interesting also, it's keeping track of the crisis. I came across this website called tracktherecovery.org. It's Harvard University, Brown University, and obviously the Bill and Melinda Gates Foundation. But lots of very interesting statistics, lots of things that are very contradictory. So, anyway, I'm not going to go in details through this, but it's interesting to point out. You'll see that obviously spending is coming to a halt and going down, decreasing. Employment is going up. It's like some of the highest numbers we've seen in history, like from 20 millions. We're still sitting at 16, 17 million. But yeah, they're claiming that unemployment is back to some record low. The markets are through the roof. Um, so what I want to point out of some of the things that's not making any sense, RBC has the same kind of report out as well, so it's interesting to look at those trends and see how they're turning here with the programs ending, and what the Canadians are going to be going through is this year. So when the CERB comes to an end, what the government plans on doing is moving those people to EI. So go back to the illusion I was talking about. Like all along, these people are unemployed, and so now all we're going to do is we're going to move a bunch of numbers from one column to another column, and now we're going to be like, oh my God, we're in big do. So it's the same for small businesses that have been surviving on those programs and incentives. Um, they all like the music's gonna stop, and then there's no chairs basically. That's the bottom line. That's actually not a bad analogy. Um, and so the narrative is being massaged in function of the numbers that they're presenting to you. But this reality that is now being harder and harder to avoid because they're running out of columns, they're running out of acronyms to hide and move these numbers around, is harder to hide now. And when the CRB ends, like I said, is the plan from the government to actually move this to the EI, which also means that people are going to be receiving less money, and this is starting to show in the way that people are spending, and realizing what's really going to be playing out in the next few months. And this is where I'm talking about where it's important to take some losses, maybe have a little bit more conservative approach to your overall holdings, investment, future planning, that kind of stuff, because I do believe that it's kind of inevitable that the markets is going to have to absorb that reality and pull back. I don't see how it's priced in here with the numbers that we're seeing in those main indexes. Um, so my forecast is still holding that we're going to face, I think, a big crunch in September, late September, October, moving towards Christmas as these numbers are coming out. And speaking about that, here's what I was talking about China. So China has been merging their big banks to take on Wall Street. And that's basically what we're seeing here. And the point behind that is the battle of the financial system of the world. Is the goal of China and Russia is to get off of the American dollar, and goes back to printing so much American dollars and the funny money and all this. At the same time, and I've been talking about this, China is launching the currency pilot program, and we're talking about real digital currency, not like numbers on the screen on your online banking. So we're talking like digital currency based on blockchain technology, which then allows them to trace every coin, who owns it, what they spend it on, where, when, and so on and so forth. Um, and I think that this is where the economy is going, to allow those kinds of academic people running the economy to continue moving around numbers, and like the magician sleight of hand type stuff, moving the cups around, because with that kind of stuff then you can have expiry date on the funds that they send you. Instead of sending you a check, they deposit digital currency in your account, and it expires, and you can only spend it on this or that, and you only spend it on this in this store or that store. So it goes back to reducing the numbers of stores that are available, or corporation, and so on and so forth. It's easier to work with. It's easier to put in place a frame for such a system. So I think it's going to be quite a roller coaster between the vaccine news and the economy news. Um, so it doesn't mean that you need to go and panic sell everything, but like this is a time to be very diligent, and keeping your eyes open and making the right moves, taking the opportunities to get out of thing on strength, and repositioning yourself. Like I mentioned, spending is in decline, like I showed in the the graphs. Bankruptcies and unemployment are going to come to the forefront under numbers and names and acronyms that we're more used to. For the government, the tax revenues are going to go down. Like all these people are going to go from CERB to EI. Well, those are not tax revenues. So that means that all these people that used to be employed at the government was able to get taxes from, to pay services, to pay programs, to pay the debt, and so on and so forth, is now reduced, but the government's debt is going higher 3 times. So I think one thing that's going to be interesting to keep an eye on is how the spending towards the holiday is going to play out. So the Black Friday, Thanksgiving, Christmas spending, all that kind of stuff, and see where consumers are going and how people are spending, um, and see what really plays out. I suspect that this year holiday spending is going to be playing out very differently than previous years. Um, in regards to more particularly Canada, perfect. Um, Canadian real estate, well, again, uh, all this coming together at the same time, a bunch of things that we hear about is, for example, after the pent up demand, record real estate results in Toronto, but yet at the same time, we have CMHC that warns Canadian banks to avoid risky mortgages, and the Bank of Canada that cuts the benchmark mortgage rate, but you and me as a consumer, we didn't see no real reduction in mortgage rates, um, and that's because one, it's the banks are looking at people that are higher risk than they used to, so now they're trying to reduce the threshold to get in, and by doing that, it exposes a greater risk to the system, and it's really hard to get more and more and more people in because we're getting on the out fridge of what would be a healthy pool of consumers. So all this is playing out at the same time as eviction programs are getting back in place, or where landlords can ask for their rent. People are not able to pay. Most people are not getting back to work. They're going to be then transferred on EI. So you can see how this is all coming together. It's not just, you know, small businesses, but the employment and how that affects the mortgages, how that affects rental business, how that affects the owners of multi-unit properties, for example. And then you put in there the boomers that wants to cash out because they got to move into smaller places or places with services they can't keep their home anymore. So we're seeing really a remake of the Japanification of the real estate market here in Canada and US. We'll see in the US, but um, so now let's talk about something a little bit outside of Canada, the U.S. elections and the postal services, and Donald Trump refusing to fund the postal services in a way that allows him to really jeopardize the results of the election, which is something I've talked about as well a few months ago on how, yeah, I'm not predicting that they won't be election, but I think Donald Trump is going to try to hold on to power for longer than most people are comfortable thinking right now. Um, so yeah, so by not funding it, it kind of serves its own purpose. And again, like now his message is that it would be at a risk of breach from Russia or China and this and that, which is what the opposite he used to say. Um, so, in overall, what we're talking about is the concentration of the corporation and the control of the economy, the market, the gap in between the have and have-nots, and I think the economy is totally skewed versus the market, the poor and the rich, basically. And this is playing out in all kinds of social tensions I'm not going to go into right now. There was a really interesting interview with Jerome Powell, which is the chairman of the Fed, this weekend on BNN Bloomberg, which I recommend is a good source of information. And he talked about how eventually those governments are going to have to face all this information. So this was the first time I did using all of this. Oh, and the good news too is with the U.S. election, if everything goes well, that should be a good prospect for U.S. legalization. But we'll talk about that in another video with chart changers. And believe it or not, this was only 1 week. So this is how much stuff I didn't even have time to really get into anything in depth, and we're only probably getting close to 20-minute video. And that is just in 1 week. So if your head is spinning, I don't blame you. My head is spinning. So I'm trying to do a good job to capture the essence so that you have like a true narrative and you don't get caught in the noise of all the bull fucking shit you hear all over the place. So I tried to curate it. I'm going to try to do a better job of playing with my toys here and getting set up. Thanks, Tim, for your help. And yeah, we'll see you guys next week. Cheers.